Hey, welcome in everybody. I am Jared Rail with Long River Realty and JR Appraisal Services, and I am here with Tim Holley, broker and owner of Long River Realty. And we have a guest today, Heather Petrillo from um, New American Funding, and she's one of our local loan officers in the area. And so we're going to start this off. This is going to be a three-part series, I believe, regarding mortgage. Heather, can you go ahead and tell us a little bit about how you got into the business and your background?
Absolutely. First and foremost, thank you for having me. I, hope to spread some good knowledge around all these mortgage topics and debunk some myths. I've been in lending for about 15 years. Started as a processor with my former husband's company in California. Moved back out here to Bullhead City, Arizona, where I'm born and raised, and started working at New American Funding as a loan originator about 9 years ago. So I started with zero production and have been able to work my way up to being ranked the number one lender in Mojave County as an individual for loan volume. So we've really come a long way. Top producer in my company and ranked in the 346th in the nation for loan officers. So the way that you get there is by having a lot of different clients from different backgrounds that give you a whole host of experiences and situations that you have to work through. So
Yeah,
it's been a ride.
yeah. Our goal here is just to try to bring quality content to people that are watching our show about real estate and the real estate industry, all things real estate. So we'll go ahead and dive in and see what you can teach us all about the mortgage industry. Um, let's start at you know do you need a down how much of a down payment do you need a 20% down payment to get a loan? What are my options if I'm a
Sure.
buyer coming in off the street? What can I do?
Sure. So the biggest statement that my clients make is, "Well, I don't have 20% down, so I can't buy a house." And I explain to them, "Well, depending on your situation, you may not need 20% down. Typically, a client would put 20% down under a few different situations. If they're purchasing a home that is not a primary residence, either we're buying it as a vacation home, which we refer to as second homes, or they're buying it as an investment property, something that they're going to rent out to someone else, right? Those are the two situations where you definitely need a 20% down payment. Now, if you're purchasing a home as your primary residence, meaning a home that you're going to live in with, your family the majority of the year or all of the year, you in some cases can put as little as 3% down, which a lot of people do not know is an option. Okay. If you are a veteran and you're doing a VA loan, you're not required to have a down payment at all, which is amazing. A lot of people aren't aware of that either. Okay.
Now, the veterans can put money down though if they want to on top of that, correct?
Absolutely. Veterans are allowed to put money down if they choose to. They're not obligated. And another, kind of interesting fact about VA loans is a lot of times a veteran will say, "Well, I've already used my VA. I can't use it again." Well, that's not true. You can use that VA loan over and over and over. And in some cases, you can have two VA loans at one time.
Yeah, that was. I was just going to ask that, but you already you covered that one. You read my mind because I've seen and I've done that one, and it was like in one they had to use the zero, and then the other one they did like 20% down for different scenarios. So
Right. Well, with the VA, depending on where the veteran's entitlement lies, they may be able to have a secondary home with no down payment as well.
wow, nice,
Yeah.
very
When
nice.
you say entitlement, you're talking about their total amount of VA money that they can borrow, I believe. Is that correct?
Sort of, yeah. It's a little more involved than that, but exactly, it's their entitlement. And when we are looking at a client who wants a secondary VA loan, we refer to it as bonus entitlement. And of course, we have this calculation that we have to do to make sure where that purchase price can be and still have no down payment. We do it pretty often, actually.
Yeah.
All right, and so then we have the first time home buyers that think that they have all kinds of wonderful programs, and I think, and you'll get into it. I'll shut up here in a second. But a first time home buyer can also be somebody that sold a home and hasn't purchased a home in X amount of time, and then they can come back and be considered that. But why don't you tell us all about the first time home buyers, facts and myths about those programs?
Right. So, being a first time home buyer is a real thing. You either have never owned a home or you have owned a home, sold it, and 3 years has passed and you're not a homeowner. Those are the two situations that classify you as a first time buyer. Now, the myth is I'm a first time buyer. I want to do the first time buyer program, and I know that there's a lot of incentives for that. Well, there really are no incentives to being a first time buyer. The most common loan program that people associate with first time buyers is FHA loans. Okay. But with FHA loans, you're not required to be a first time buyer. You can own a home and still purchase a property with an FHA loan, provided you're going to occupy that as your primary residency.
Yeah,
Go ahead, Tim.
Yeah, and I was going to
That's
say, I
something.
think, go ahead, Jared.
No, I was going to say that's something that people ask about all the time, but is down payment assistance and those kind of programs that are available for first time home buyers. But then when you really get to the nitty gritty of it, it may end up costing them more money to use that program than it would have to do a traditional FHA where they put 3.5% down.
Well, it's funny that you mentioned the down payment assistance programs, because the most common one that's used in Arizona is the Arizona Home Plus, and even that does not require you to be a first time buyer to utilize that down payment assistance program.
So it's not even really a first time home buyer program.
Nope, it's
And
really, we call it a DPA. It's a down payment assistance program. And Jared, you're absolutely right. By the time our clients realize the interest rates and additional fees that accompany those first time buyer down payment assistance programs, however you want to classify those, they realize that one, they've either now priced themselves out of an affordable home because the interest rates are astronomical. And two, if we're getting a seller credit for our closing costs, then, our seller credits really aren't going to be there because those fees are so much more, they're so much higher.
And then something in the FHA, because that is a lower requirement for down payment. And let's say somebody that doesn't have the buying power, meaning that they can't buy four, five, $600,000 homes, so they have to buy. Doesn't an FHA allows them to buy single wide manufactured homes?
Absolutely. So all loan programs now, your FHA, VA, and conventional, all allow for single wide manufactured homes. I would say that FHA is certainly a great program for a first time buyer because it does allow for a 3.5% down payment, which is affordable in most cases. Second to that, when you're a first time buyer, not everybody has all of their ducks in a row. Sometimes they're fresh out of college, sometimes they're starting a family, and so it really allows for a higher debt to income ratio. It allows for a higher risk, which is typically what you find with a first time buyer. So I think that's why a lot of people really associate the FHA with the first time buyer program, is the leniency overall.
And I think some of them are because they have programs where my uncle could gift me X amount of dollars to go towards down payments or closing costs. Is that with FHA or is that a conventional or?
So you can have gift funds on any file as long as the occupancy is primary residency or second home. If you have investment property, gift funds are not permitted.
now, on that, you can do a duplex, right? As long as you're going to be living in one of the units. Is that only specific to certain programs,
You can
or
do
is
that
that for
with,
all of them?
that's for all of them.
Okay.
You can do that for all of them. Every once in a while, we'll have a client purchase a duplex as a primary residence, and it's, in my opinion, it's really kind of a no-brainer.
Yeah.
Yeah, you can definitely do that, and you still have the same down payment requirement. So, if I'm going to buy a fourplex and I'm going to live in one of the units with FHA, I'm still required to have a 3.5% down payment. It doesn't increase.
If you do that, if you buy a duplex and so it has a potential rental income, will that potential go towards your income?
It does. Yep, you're able to calculate positive cash flow from those units.
Actually,
And what,
I think it's a pretty cool program. It's not something I think that's widely known out there, that you can do that. But if you think about a lot of younger people or first time home buyers, a duplex might be a great way to start, or people who are getting to retirement age and they're looking to downsize, and being able to buy something like that and have residual income coming from the other side, helping pay the payment, and being able to use that as part of the qualification.
Mhm.
It's I mean, it's not going to be the right thing for everybody, but for certain people, it's actually a pretty cool program that, again, like I said, is probably not many people even know that you can do that.
Right.
Um,
I would agree.
but I got something
So,
written down here I wanted to ask, because a lot of times this initial conversation when I start the process with a new client, they're not even a client when this conversation starts usually.
mhm.
But this is part of how they become a client is, you know, you talk to somebody who's like, well, I'm working on my life and I'm getting things together so that I can, buy a home at some point in the future.
Yeah.
And it's like, well, have you talked to a loan officer yet? You know,
Yeah.
that I can't tell you how important I think it is that you start that process sooner than later, because you might be working on all the wrong things.
Mhm.
Um, and talking to a loan officer and having them get you on the right track, if it's a good loan officer that will take the time, look at your credit report, point you in the right direction, and many people already don't even need to work on their credit. They think they do because they're a 580 credit score, but could you qualify with a 580 credit score?
Yeah. So we actually, for our VA and our FHA loans, we'll go down to a 500 credit score. And I'm actually glad that you brought that up, Jared, because I work with first time buyers often, right? Pretty regularly. And it's always important to me to let them know that this whole process of pre-qualification is designed to give us an idea of where we are, right? Do we need to work on anything? Like you were saying, is our credit sufficient? Where is that debt to income ratio, right? So the thing that I really try to stress to a lot of my real estate agents and to my clients is the pre-qualification process is free. It doesn't cost you any money to have a conversation and gain whatever knowledge I have in this brain that can help you with your situation. And they're not obligated either. Sometimes I have clients who pre-qualify and we're ready to go. Other times I have clients who pre-qualify and they have to work on some things. And so I work with them, whether it takes a couple weeks or a few months, we stay in communication and we get them to a place where they're ready to buy a house. So we're invested in that process as well. And so, I really want a lot of people to understand that pre-qualification is your friend. It's not like walking into an attorney's office where you have to pay all this money and you have to know all of these terms, right? My job is to teach you lending, right? If you're a nurse or a doctor or you work for the railroad, I don't know how to do that job. So you would be the expert if I had to go to you, right? So I always let them know that I'm the expert here. Let me teach you so that you understand what you're doing.
Yeah, and a lot of people need to understand too that, let's say they come in there and you say, you know what, we're going to get this, we're going to make it happen, but we're probably going to take a few months to get put together what we need to do.
Mhm.
And the people are like, oh, a few months, never mind, that's not worth it. And I sit there and think, and I do this to my youngest. She's going to be 22 this year. And she's, Dad, but that's like not until 3 or 4 months away. I'm like, Megan, how old are you?
Yeah.
You know how fast time goes?
Yep.
You're coming up on 22. Next time you turn around, you're going to be 42.
Mhm.
Time flies. 3 months is nothing.
Nope.
You're getting a head start. You're being given knowledge on how to better yourself, and you only need a few months. Listen to Heather. Do what she tells you to do.
Mhm.
Yeah. I mean,
Yeah.
like you said, so no obligation,
Mm-mm.
no risk,
Mm-mm.
and only the potential for reward. I mean, if you have the dream of home ownership at some point in your future, go talk to a loan officer so you can
Mhm.
start getting on that path sooner than later, right?
Right. And don't be embarrassed about your situation. If you think it's rough or if you think it's terrible, believe me, we see all sorts of stuff, and there's no judgment from this side of the table because I understand that life happens. My job is to get you to where you need to be. That's just the long and short of it.
Yeah, most of the time, that from what I've seen, if somebody comes and talks to a loan officer and takes the steps that they need to take, this is not every situation. I mean, of course, there's things that have, if you have a bankruptcy or a foreclosure in your past or something like that, those have specific lengths of time. But most stuff can be fixed in 6 months to a year. You could be buying a
Sometimes faster
house
than
if
that.
you go in and you talk to a loan officer and you take their advice, and actually you have to do the work.
Yeah.
The loan
Yep.
officer can't do the work for you. Your realtor can't do the work for you.
Right.
We can give you the information. Now it's up to you to make the decision that you want to actually put the work in. If you don't, you'll never own a house.
Well, it's also important to understand that the advice that your loan officer gives you, we'll go back to Megan, Tim. If we say you need to take 3 months to improve yourself, take that advice, because you're much better off going through the hard steps before you're under contract than you would be by forcing a pre-qualification and forcing a situation and going through all those challenges in the middle of your transaction. It's going to give you a headache. You'll wish you never did it.
Right.
So do your due diligence up front, and then you go into it, and you create a much more solid offer to the listing agent, to the seller.
And I always say, everybody can hear me say, I say this all the time. Knowledge is power. People, take the free knowledge that we're going to give you to put you in a powerful situation to get you to where you want to be.
Mm-hmm.
And that's what they don't understand. That take that, listen to what Heather has to say, follow the steps, check back in. Because I know a lot of the stuff to do, we all check in and keep each other informed on what's going on. Hey, just want to give you an update. They followed the steps that I told them to. Now they can actually qualify for a little bit more money. So now you can change your search parameters. Because what we do at our end on the real estate side, once we've talked with the lender and said, okay, now how much they qualify for, we put them through our systems on what we call a drip system.
Mm-hmm.
That means every time something comes new to the market, price changes to the market, whatever's going on, it has a wide range. So it sends it over to these people. So if they're doing all the things that you tell them to, and then everybody gets back with us and says, you know what, they actually qualify, they can afford another $50,000. Now we can raise and change the criteria up, which gives them a wider range of homes to take a look at.
Yep. Broadens their search parameters.
Yep.
Mm-hmm. I like it. It makes sense to me, but I mean, we do it every day. So
yeah, I know it's a simple process because we do it. And if we didn't do it every day, I would understand. I'd be the same place, because I can remember way back, because I'm old, when I bought my first time home in Havasu. They had the USDA program,
mm-hmm.
and because Havasu was still a small town, and I didn't realize that I could go in and buy, and I think they still have those programs in some areas,
yeah.
that I could buy it with no money down and do this. And I got a payment. I got a smaller house. Don't get me wrong. I didn't buy a mansion. But here at a younger age, I was buying my first home, at 23 years old, back a lot of years ago. Mm-hmm. And I believe, do they still have that program today, the USDA?
Yep. USDA is still alive and kicking. The thing with USDA is it's a great loan program. Okay. But with USDA, it really, the parameters to qualify become restrictive. It's not as lenient as FHA is. I mean, it wants to see a decent credit score, right? Although the guideline says 580 credit score, it's not too often that we have a 580 USDA qualify, right? They want to see that a client can be, a little more solid, right? Because they have really no buy-in on USDA. So they want to make sure that the credit is good. Do we have good credit rapport? They want to see that we have 1 or 2 months of the mortgage payment in the bank. They also, really have a threshold on the debt to income ratio overall. So USDA becomes a little more challenging for most first-time buyers because, again, as a first-time buyer, not all of us have our ducks in a row, coming straight out of high school or college or what have you. But yeah, we still have it here. It's alive and well.
And I think, isn't it restricted on area too, population? That's why Havasu qualified way back. Mm-hmm. And I remember when I first got into real estate, this is back in 2001, because I'll never forget this day. I used to do that. I worked as a buyer's agent, and USDA was the program that I was getting people all day long to learn how to buy homes and teaching them how to buy that. And I remember there was a guy there one day and was like, "Okay, we got you qualified for USDA. We got the price. Okay, now we have to make an offer, and with your offers generally comes some form of earnest deposit."
Yes.
And I explained that to him. He's like, "Tim, but I don't have that. I mean, this is why we're going for this loan." I said, "All right, what do you have?" He says, "I got a saddle." I said, "What?" He goes, "I got a saddle." I said, "Believe it or not, that works." And you should have seen the title officer. And this was up in Kingman, so they're used to seeing the cowboy stuff up there.
Sure.
And I said, "We got a saddle that we'll put up as earnest deposit." And I got the seller to agree to that. And we're like, "Okay, who's going to hold on to the saddle while we're in escrow?"
Oh my.
But that actually came through, and they negotiated it back so he could get his saddle back at the close of escrow with the USDA when it went through.
Wow.
But yeah, so it was a wild deal. The guy ended up, and I can't. This is a long time. We're talking. This was 24 years ago, so I can't remember if the seller just felt bad for the kid, said, "Thanks for buying the house. Here's your saddle back," or if we negotiated in the loan deal. But
I thought
people,
you were trying to tell us you were a lot older than that, Tim. I mean, this sounds like the old West. What's going
yeah,
on
no,
here?
this wasn't. This is how creative I've always been. Creative, even in my younger days. It's like, how are we going to get this to go through? This guy doesn't have any money. It's USDA, but he's got the credit. He's got the job. He's got everything else. We got to get this to go through. And sure enough, he had a saddle.
And
He says, "I got it."
anything of monetary value, right, can
That's
be
right.
the earnest deposit. It's usually in the form of money, but
Yeah.
as you just so eloquently pointed out, that it could be anything.
Yeah, and lenders don't frown on that nowadays, do they? If someone says, "Well, I want to put this up," and the seller says, "Well, I'll take it,"
Well, I'll be honest, in my 15 years of doing this, I've never seen anything other than cash for earnest money deposit. But I mean, to me, as a lender, the contract's written how it's written. So I
Yeah,
wouldn't, I don't know that we would
That's
have a
just a line
situation.
on the contract for you, right?
Yeah.
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 That's um. I wanted to ask, what is the difference here? Can you explain what the difference is between a pre-qualification and a pre-approval?
I'd love to. So a pre-qualification is where a borrower and myself will have a conversation either in office, over the phone, or they'll submit an application online about their income, assets, and credit. Okay. I'll review income documentation for them. We will run a credit report. And from there, determine how much money they're budgeting and all of that. So a pre-qualification is when a buyer and a loan officer sit down and have a conversation, review documentation, and determine budget overall. Okay. A pre-approval is when a buyer will have the same conversation with the loan officer, but we take it one step further. From there, we take all of those buyer docs and we send them to our underwriting department for an underwriter to review every little stitch of paper, all the details of that buyer, and tell us, yes, we have a good understanding of this client. We don't see any red flags with this file, and you are clear to, write an offer on a contract. So really an underwriter is a higher step than a loan officer, right? They're the ones that really dig into all of the guidelines, make sure that the loan is compliant, make sure that our client is meeting all of the criteria within that loan program. So it's more solid.
And Heather, you're bound by what that underwriter asks for, but as we know, as Tim knows, as I know, having a loan officer who's been at this for a long time, as yourself, um, it's like having an underwriter working for you. You know what they're going to ask for.
Yes.
We don't have to wait for the underwriter to ask. You already kind of know. There's no hidden stuff that pops up at the ninth hour. Yes, they ask for more documentation.
Sure.
Stuff has to be updated, but somebody with experience as your loan officer is key for that reason. You know what they're going to ask you for. You know what
Right.
the
And if
issues
you,
are going to be.
right. And if you have a good loan officer or someone who's done this for many, many years, we are very familiar with the guidelines that the same guidelines that the underwriters are reviewing. So we have enough, forethought to say, I know I need to ask if my client is paying child support. I know I need to ask if my client has had a bankruptcy. And when I get a bank statement, I know I need to look for large deposits that might be out of the ordinary, or, affirm payments, buy now, pay later kinds of things. So those are things that you learn over time, most of the time the hard way, but you never forget them. But those are the things you learn over time. So when we are doing this pre-qualification, it's really in depth and we cover a broad range of topics. And so, listing agents know when they get a pre-qualification from myself that, we've vetted that buyer pretty well.
And generally, how long does that take to get it to where they're strong enough that you're comfortable to give the realtor a pre-qual letter to go with the purchase? Can we get that generally within a day or so? How long does it take you to put a pre-qual letter to go with an offer?
In most cases, I'm able to issue a pre-qualification letter same day. If not same day, within 24 hours, unless I have a client who is very involved. Some clients own 1, 2, 3 businesses. Some clients might pay child support or alimony. So gathering those documents to make sure that we have everything accurate. That's where you might see that 24-hour turn time, or perhaps a little longer. But most of the time I can do it same day, especially with, some of the technology we have there. We have a few platforms where we can verify income for clients. I don't always need to get pay stubs in W-2s. Oftentimes we can pull it online through our sources, and it'll, give me real-time income. So I'll give you an example. I did 2 today that I was able to take the information, send the prequel. So within about an hour, hour and a half, these prequels are out.
Nice.
Yeah, if you've got all the information, it doesn't take long at all. It's a matter of getting all the information, and like you said, like myself or Tim would be a little harder qualification because we're businesses, independent contractors. It's not a pay stub, it's not a salary. There's a lot more that involved, a lot more stuff that gets involved. So that process becomes a little more tedious, does it not?
Yep. Yes, it does. Although I have to tell you, some of my self-employed clients are pretty quick. I had one yesterday who owns 4 businesses, 4. So I, took all his information over the phone and sent him an email. I said, I need A, B, C, D. He got it straight over to me in a hot minute. So I spent the next hour and a half reviewing business tax returns and income calculations. But, if you know what you're looking for, you can usually get them done pretty quickly.
And something that I've learned over time, because I've been self-employed for 25 years and I've bought stuff, sold stuff. I've always given carte blanche to my accountant or CPA, whoever I have, because they have everything you have. Mm-hmm. So I know there's been times, okay, I want to buy this. All right, I'm going to give you everything I have, but I'm going to open the line of communication that if you can't get a hold of me, you can call the accountant, because the accountant there's going to be some things the accountant doesn't have. But when it comes to my tax records, mm-hmm. when it comes to my quarterlies, when it comes to everything else, they're going to have it. And now I know it's going to cost me a little bit of money because now they're on the clock too, and I expect nobody to work for free. But for you self-employed people out there, that's something to think about is keep that accountant on standby, because a lot of the stuff that you're going to ask, if I'm driving down the road because I'm self-employed, I'm doing business, and you say, hey, I need this right now, it's easier for me to say, hold on, I'm going to call my accountant. They're going to get that over to you, or you call my accountant, because I've already told them you'd probably be calling. This is what I need. So self-employed people, you really got to open up the line of communication with probably quite a few people.
I would add one more layer to that is be patient with the paperwork requests, because it's very common to get, 1120S or even a 1040 and see that there's a partnership, 2 S corps and maybe, I don't know, another, Schedule C. So if you've only told me about one business that you own, well, we've got to see all of those businesses. So really be patient with that. And every self-employed client really structures themselves differently. It's almost like a fingerprint. So, it's not uncommon to go back and request additional information or documentation, because you need the whole picture.
Right.
You want me, want me to give you money. I need all the info.
Yeah, that comes back to hiring and having a loan officer that you can trust, that's educated, that knows all the stuff to look for, and those kind of not, what I wouldn't call a slam dunk, easy pay stub transaction. For you, it may be easy, but for somebody who's a newer loan officer that doesn't have that kind of experience, it may be very difficult to navigate that process. One more question from me is, when doing a pre-qual, will you do a pre-qual using just a soft pull, or do you need a hard pull to be able to issue the pre-qual, or does it depend on the situation?
It really depends on the situation overall, right? I mean, you definitely need to run a credit report. That's imperative. And in this business, when you do it long enough, you get a feeling for your clients, right? And so with the pre-qualification, I will often run a soft credit pull first, and I will email my clients, these are the debts that I'm showing that are reporting. Does everything look accurate? They'll tell me yes, they'll tell me no, whatever they tell me. So we get that out of the way so that we know where we are. And then I let them know, okay, we've done our soft credit pull. You look like you're in a good place. Here's our budget. Before I can issue your pre-qualification letter, I do have to do the hard credit inquiry. So it's the hard pull before the pre-qual goes out.
Yeah, and maybe I worded that poorly, and that's a very good point. So if I bring somebody who's just starting the process, who has no idea if they can buy a house or not, that's where you would use the soft pull, is to see, is this realistic? We don't want to do a hard pull and have it show up on somebody's credit when they're going to be a year down the road.
Right.
But if you determine using that soft pull that, yeah, we can qualify, yeah, we can get you qualified probably in the price point of the type of house that you're wanting to look for, then we need to do the final steps to get the full pre-qual before you can make an offer on a house.
Right, because one of the boxes that I'm obligated to check on the AAR pre-qualification form is that I have reviewed credit. And a soft pull would not technically be a full review of credit.
All right. Well, you know what? I think for this episode, we're about winding down. And the next episode, I'd like to get in depth into that. And Jared will remind me of that so we can get that to start out the next episode. Heather, thank you for being here today. But please tell us, how can people get a hold of you?
The best way to get a hold of me is to call me. My cell phone is 928-444-5900. You can text or call, and I will always return your call, believe me.
All right. Jared, anything last words you want to say before we wind down today and take it into our next episode?
No, I think I'm good. I'm looking forward to the next episode and finding out more about the whole process.
Yep.
All right. Sounds good, everybody. Thank you, and we'll be talking to you soon. Hit the like, the subscribe. I didn't violate by naming off any companies that I have to do disclosures to this time around. So anyways, everybody have a wonderful day, and we'll be talking to you soon.
Thanks, guys.
Thank you.
See ya.